Well, hello everyone. Welcome to Getting Started with Technical Analysis. My name is Barbara Armstrong, and I have somebody singing in my ear. Let me just see what is causing that. Oh, hold on one sec. Oh, okay, there we go. Okay. Sorry, guys, I just had something start in the background. It was probably related to something I posted on X just a short time ago about this class. But today we are going to talk about candlesticks. And this is a class I always look forward to because when I first was introduced to the world of trading through this education back in 2011, and I saw charts and I saw support and resistance and then I saw candlesticks and the story that the candlesticks told. I was so in. I was fascinated. So we're going to spend the whole time today talking about candlesticks. And if you are new to all of this, feel free to ask questions. That's why we're here. This is an introductory level class. I've got Connie coming in with me in the chat. She understands all this stuff in spades, so don't hesitate to ask if you've got questions. If you are not following us in the land of X, I encourage you to do so. My handle, Barb Armstrong CS. Connie's is Connie Hill CS. And I can see that we have a lot of those that I affectionately refer to as the usual suspects. So thank you to all of you for helping bring this class to life, to Kevin and Paul and Josh and Sia and Willie and China and Regina and Jay and Richard and Paul and the rest of the gang. And special kudos to see you and Jay and Josh for being the first ones into the chat today. If you are brand new to this class and you've not been here before, please feel free to type a greeting into the chat so we can welcome you. And just before we get into the thick of things, know that we're going to look at a pile of charts today on the Thinkorswim Paper Money platform, but know that everything that we discuss here is for general information purposes only, none of it to be construed as a recommendation or endorsement of any particular chart pattern, stock, or investment strategy, okay? And know that options carry a high level of risk and aren't suitable for all investors. We will likely do a stock trade today, but we will sometimes do options trades as well as examples. We're using the Paper Money software application on the Thinkorswim desktop platform. And if we choose to put a stop in, know that stop loss orders don't guarantee that we're going to get out at a specific price. If we use a stop market and it hits that stop price, it will trigger a market order to sell. Okay, and we could end up out if it gaps down much lower than the requested price. So this series was revamped at the beginning of this year. We are now in week 4 of a 9-week rotation. And if you're thinking like, oh, I'm new here and today is my first time and maybe I should just wait for another 6 or 7 weeks to come back, you can go and catch up by watching these in the archives, but each one is somewhat independent. So not to worry. I also tend at the end of the 9th week to throw in a bonus session. The last one, I think, was the 7 or 8 things I wish I'd known about investing and trading when I got started. So if you missed that, you may want to go back to the archives and check that out. And all of these are available in the archives if you want to do, some binge learning as opposed to, binge watching. We're going to review some candlestick basics. We're going to discuss some of the concepts around candlesticks and look at some common patterns. And then we're going to go out and look at the charts. Lots of examples on the charts from which we're going to place a couple of example trades. And then just before we get into that, I want to mention that if you've never been to a live event, we do have 3 left to go this year. So, 1 in Anaheim. So we're covering a lot of ground here because we're going from the West Coast to the East Coast and then we're stopping in between. But Anaheim is a 1-day market drive, November 22nd, the Saturday before Thanksgiving. and we kind of go from looking at global markets, how tariffs are impacting things, right down to individual stocks. We'll have the coffee on in the morning. We'll cover your parking, and we'll feed you breakfast and lunch, and then provide a great reception at the end of the day. Then we have a 2-day event coming up in Houston, mid-December. First day is Intro to Technical Analysis. Day number 2, Intro to Options. So if you're at the front end of the learning curve or would like a refresher, that would be a great event to attend. And then we have an Advanced Options class coming up the weekend before Christmas. And I had thought last year, I think we did an event in December last year as well. And I thought it would be pretty sparsely attended, and it was bursting at the seams. So if you want to attend these events, I wanted to just bring up a link that Ben Watson sent me. The Advanced Options event also, and I'll give you this link. For this, but feel free to join tonight. And I don't know how many of you joined this virtual advanced option or advanced technical analysis workshop, but it has been a big hit. It's actually advanced options, so I stand corrected. But here is a playlist for that. And we had 6,000 people at that event yesterday, virtually attending, and it's not too late. You can hop on. It's Monday through Thursday, and then there's a Q&A on Friday. So that's an advanced options workout. Apparently, rumor has it, Jay said last night was great. Apparently, he's going to talk about callers and other trading strategies today. And so if you want to see when these events are, let me just guide you to schwab.com/coaching. And somebody asked this, I think it was in James Boyd's class this morning. It was either that or in futures. I've been in the chat for a couple of classes today. But if you come to live webcasts and virtual workshops, my default is that it brings up everything, the virtual workshops and the webcasts. So I'm going to unclick the webcasts, and you'll see here it is, and it starts at 6:30 Eastern. So 4:30 Mountain, 3:30 Pacific. So it's starting at 5 p.m. Eastern. Oh, sorry, it's 5 to 6:30. I stand corrected. 5 to 6:30 Eastern. I missed the 5 dash. Yeah. Yep. And so this might, if you're thinking of going to the advanced options workshop, this would be a great precursor because, they say the repetition, repetition is the mother of all learning. And so, highly recommend that you check that out. Also, if you're thinking, well, I can't do that, and somebody asked about in-person events. So we've got, like I said, 3 left to the end of this year, but we've got the whole first quarter laid out. So we'll be in January, we'll be in Dallas, and then at the end of the year, or end of January, we'll be in Washington State. We'll be in the Seattle area, and then we're going to Sacramento and San Diego in February, Atlanta in March, and we'll wrap up in Denver. Okay. And I love these events. I love them as a client. I love them now as a coach. Yeah. That was apparently in that live event last night, the virtual event. There were a ton of questions, and Ben is very gifted. He's been coaching for a long time, and he is extraordinarily good at it. Okay, so back to our regular programming, as I like to say. So these are the next 3 market drives, and that's where you can register for those. Okay, so let's talk candlesticks. So a candlestick is created when you take your open of the day and your close of the day. And then you wrap, let me just change my drawing tool. So you take your open of the day, which is here, and your close of the day, which is say here, and then you create a body or a box around it. And that becomes the body of the candle. Okay, and it shows the relationship between the body of the candle, shows you the relationship between the open and the close. And sometimes we can end up with a body that looks like this, very skinny. Typically, they'd call that a day of indecision. And then sometimes we can end up with a body that looks like this. And that can be either bullish or bearish, and you'll see some examples of that. Usually there isn't a taper. Yeah. Yep. Okay, so that's that. Now, when we add the wick, if you think of a candle and a wick, and I'm a big fan of candles, but so if we have a wick at the top and a wick at the bottom, what does that represent? Well, it means, and we're assuming that this candle is bullish, that it opened here, and maybe it opened and it came up, and then it came down to here, and then through the course of the day, it went all the way up here, and then it ended up closing here. And so this shows us, our open, our close, our low, and our high. And so these wicks give us the highs and the lows. Okay. And if we look at a 1 day, 1 minute, candle, we can see how much, upping and downing there can be over the course of a day. Okay. So the rectangle is called the body. That shows us the open and the close. And then the wicks give us the high and the low. If this is a clear body, and it depends on whether you're using candle or candle trend, but if it is an empty body with a green line around it, that shows us that it opened lower, closed higher, or if we have a clear body period, it could also be a red candle. Have a red line around it, meaning it opened lower, closed higher, but if it still closed lower than the candle of the day before, it might show, an open body if you're using candle trend. If you're using regular candles, and I'll show you this on the chart as well, this might appear red, even though it closed higher than it opened. Okay. Actually, I may have misspoken there. It would show as a bullish candle if you're using regular candles. We'll see that on the charts. I'm not trying to confuse you. Okay, so the rectangle is the body. And if you have an open and then a lower close, on my charts, that's going to show as red, right? If it's part of a downtrend. So the vertical lines extending from the top and body are the shadows. Some will call it shadows or wicks. And again, they're showing the high and the low. And black or red bodies show a lower close than the open. Now, within a candle, we've talked a lot about support and resistance. And, when we talk about support and resistance, often we're thinking of that in the context of a 30-day moving average or a 10 or 100 or a 50, but we can have support and resistance levels within candles. And so that may be news to you. So, the middle of a candle, if we have a big up day, the first support level is considered to be about halfway down the body of the candle. Support level 2 would be where it opened that day. And the third support level would be considered to be the wick of. Now, if it's a bearish candle, this halfway up that red candle might be a first resistance level. And the top of that candle, where it opened from, might be considered a second resistance level. And then the third resistance level might be the top of that wick. And so if I were to bring up, let's bring up GM, for example. So today, GM is up 15%. It gapped up. And, at some point during the day, so we can see that this pulled back from where it opened. It opened here. So far, the high is here, but it did reach a new high of 67.55. And so if we wanted to identify those support levels, and I'm just, let's erase that. So this might be a first, a potential support level, a second, and a third. S1, 2, 1, 2, and 3. And, and then when we had this big down day over here, we could say that this might have been a potential resistance level, this R2 and the top R3. And obviously, none of these served as a resistance level for very long. The next day it gapped open. It gapped on the open and started at about that midpoint. Okay. So that's how, so would we be surprised if tomorrow we ended up with a little pullback, to this support level? Or could it pull back for a few days and create a bull flag and come all the way back to here? Yes. And would we be surprised? No. Yeah, it could keep on going too. Okay. So that's that one. Let's go back to our examples. Now, when we have the size of the candles, it is significant too. So when we have a big white or a big green candle like we see on GM today, it indicates heavy buying. And when the candle gets smaller, it indicates that, kind of the buyers and sellers are duking it out and there's slightly stronger selling pressure. And you might say, well, what makes a large candle large and what makes a small candle small? Well, it's relative to the other candles on the chart. Some stocks tend to move more in a day and have bigger candles than others. So you just want to look at it in the context of all the other candles that you're seeing on the chart. Okay. And now, what about when we have these big black or big red candles? Well, those indicate heavy selling. Have we seen any charts with heavy selling today? We have. And here, this pattern, where you have this little white, so big white, big green, big up day, small up day, which is indicating that, there may be some buyer fatigue and the sellers are starting to come in. And then when we have this pattern here, and we're going to talk about this at more in a minute, but this is called, a mistake on the part of your presenter. This pattern is called a bearish engulfing, in that this big red candle totally engulfs this pattern, this candle, and it's a sign that we may see a pullback for the next few days. And in fact, that is what happened. And then you get this small black candle saying, hey, the buyers are maybe starting to come back in. Okay. So, and this pattern where you have a big down day, and typically, for it to be technically a perfect pattern, you want this pattern to be, this candle to be smaller, which it is, and to kind of gap down. And then the next day, big up day. That pattern it is called a morning star pattern when it happens close to a support pattern. So our large and small are relative terms, and they can show us just how much buying pressure or how much selling pressure there is. Now, this is what I call a handy reference sheet, and I just posted this on X. And so, if you wanted to capture this, or if you don't capture it during the class, I have posted it on X for your reference also. But these are some bullish reversal patterns and bearish reversal patterns. And you can see I've put, they put kind of one over top of the other. So a hammer is where you have a long wick at the bottom and a small body at the top. And when that happens close to a support level, we call that a hammer. Now, if it happens closer to the ceiling or a resistance level, same candle, we just call it a hanging man. Okay. And then if we have an inverted hammer, which is this just flipped upside down, we call it an inverted hammer. So that makes sense. And again, it's bullish if this happens at a support level. If it happens, by hitting its head on a ceiling or a resistance level, we call that a shooting star. This is an indication that the pullback may be drawing to a close. This is an indication that this uptrend may be ready for a little breather. Okay, and piercing line, again at support, you have a big down day followed by a big up day where the up day pierces the body of the previous day's candle by at least 50%. So it goes past that resistance 1 level. And dark cloud cover is the opposite. You have a big up day followed by a down day where the body of the down day comes past that halfway mark. So it kind of blows through that potential resistance level. Now, we call a pattern engulfing if you have a candle that the next day is engulfed. So it opens lower and closes higher. When that happens at a support level, we call that a bullish engulfing. When it happens at a ceiling or at a potential resistance level, we call that a bearish engulfing pattern. Now, haramis, so harami, salami. So harami, I believe that is the Japanese word for pregnant, and it kind of looks like a kangaroo and a joey where, this body of this candle is totally inside the belly of the candle from the day before. And when that happens at a support level, and it's typically a big down day followed by a smaller bodied candle inside the body of the previous day, that's bullish. Okay. And when that happens at a ceiling or a resistance level, bearish harami. And we're going to see examples of these. And then a morning star pattern happens when you have a down day, a small bodied candle the following day, typically that has gap down. And then you want, like, the bigger this third candle, the bigger and more bullish, the better. But you want it at least to come up through that halfway point on this candle. And in this case, in this example, it blows right by it. So that is bullish at a support level. And when we have the opposite happen, big up day, this is called a doji. Whether it happens at support or resistance, this candle, it's like a spinning top, a little body in the middle followed by, kind of similar sized wicks on either side. And then followed by a down day that goes past that, support level 1 point. So evening star. Okay, so let's go out and look at some of these things on the charts. And then from that, we'll place a couple of example trades. So when we look at We can close this. When we look at AMD, what do we see here when we kind of zone in? Well, one, year to date, the stock is up 95%. So it has been moving bullishly, kind of went through a period of consolidation, and then it gapped up. Remember, we said when something, you have a big green candle, and the way my charts are, so if you look at this, let's look at this candle. Because I have candle trend, this candle is green. Now, why is this candle green and this candle's bullish too? But why is that an empty green candle? Because this one opened higher and closed lower, but still closed significantly above the previous day. So if you're using candle trend, that will show as green. This candle opened this day, the stock opened here. It opened at 212.95 and it closed at 235.56. And so this closed much higher. When we look at this day, it opened at 226 and it closed at 203. But the previous day, the stock closed at 163. So it still closed like $40 higher than the previous day. Okay. And then, it came down the second day and then, continued on up. Now, what we're seeing now is, a bunch of these small bodied candles. So some might say, well, I see this as a potential, as a hammer at a support level if it's using the 10-day moving average as support. But this stock has had such a cataclysmic move to the upside that all these moving averages just haven't even had a chance to catch up. So you might draw your own line here. And say, it's coming down to a diagonal support line. Okay, now I want to show you, this candle trend business. What do I mean and how do I change that? So if you come to your chart settings and then appearance, I have candle trend in here. If I change it to just candle and hit apply and okay, you'll see this candle appears red. Now that kind of drives me bananas because the stock closed this day $40 higher than it did the day before. I don't see that as a bearish move. So I use candle trend, but you know what? It doesn't mean you should. You can use whatever you want, but again, appearance and candle trend. And so now with candle trend, it's taking where it closed in relation to the previous day. And so this one, you see, it did close lower. It did, close higher. But again, this one too opened higher and closed lower. Okay, so that's AMD. Let's look at some Haramis. So if we look at Amazon, we saw, and not all Haramis, follow through, right? There's no guarantee. It's like, but technically when you have a big down day and then you have this small body, this is an inverted hammer at what may be a new support level. It's also a Harami in that the body of this candle is totally inside the candle of the previous day. Now, and then did it move to the upside? It did. Okay. Now, if we look at this pattern, so we have a little pullback and then we have this pattern. What do we call this? Go ahead and type it in. So we've had a little pullback, down day, gap to the downside, and then we want this next candle to at least go halfway up. We call this configuration, I know that there's a bit of a delay in the timing. We call that a morning star pattern. Now here we had some consolidation kind of along here, didn't we? And then we had this big down day, and what do we call that? We call this a harami. But in fact, did it go up the next day? It did not. It fell for 3 or 4 days, and you're going, hey, this was at a support level and we had the harami, what's cooking? Well, it just shows you that not every time a candlestick pattern is not a guarantee, but it did pull back for 4 days and, is moving up now. Yeah, this is called a morning star pattern. So Travel D and China favors, you're absolutely right. Okay. Let's look at Capital One Financial, ticker symbol COF. So again, we have a support level. Oops. Let's just zone in a little. So we have, something that has fallen, and then we get this harami pattern, where this is totally inside the body of the previous day. This pattern does not technically require confirmation. It's saying this is a bullish pattern, particularly if it's appearing at a potential support level. And it did move up. And then we had, I'm just going to draw a little line here. It came back down, didn't it? And retested. So another big down day. And now we had 2 days ago, another harami pattern, and it's moving again to the upside. Now we do have earnings coming on this one after the close today. So it'll be interesting to see what happens with that. Let's look at TXN. There have been a lot of haramis happening lately. So here we have, a stock that has been downtrending. I mean, this stock is down year to date, but we did have this harami pattern happen here at a support level, indicating that maybe it's going to bounce within this pattern that's setting up this pennant pattern. And in fact, it has done exactly that. Doesn't always, but, another harami pattern. Oops, meant to bring up Apple. So with Apple, we had this stock that's been uptrending in a range, and then when we, let's come in even a little tighter. When we look at the last few days, what do we have here? We have a big down day. It comes down to this support level, and then we had a harami pattern, and followed by another couple of candles of a hammer, a doji, and now it's continued to move to the upside. I can take this off our long call. Earnings coming up on Apple also. But it was this day, that some who look at Apple regularly might have said, I spy with my little eye something that looks like an entry. Now, if we look at Ally Financial, this had come down to a previous support level also. Big down day, followed by this harami pattern. Do you see that? So Ramsey is asking, with the candle pattern, do you need other confirmations beside the support and resistance area? And the answer is sometimes. It depends. And it depends on what? It depends on what candle pattern you're looking at. So with this bullish harami pattern, this does not require confirmation. If we look at if we look at either of these, inverted hammer or a hammer, these do require confirmation, and they're looking for a confirmation of a close above the body of the candle from the previous day. And so here, this day it opened at 40.64. Here it closed at 41.37. So this would technically have been considered confirmation of a close above this inverted hammer. If you wanted to be a little more conservative, you might have waited till the next day. So a hammer or inverted hammer does require confirmation. A harami or an engulfing pattern. Now this is considered to be a bearish engulfing pattern. You had this big run to the upside, then we had this candle that starts higher, closes lower, totally engulfs the body of the previous candle. So if you traded options and wanted to do a bearish trade, you might have looked at this pattern and said, I'm going to enter a bearish trade now. Okay. Allied Financial. So we saw 4 different candle patterns there. Let's look at Dell. So with Dell, this is a tech stock. It's up 30% year to date. We can see that in the last, 6 months, this is a 3 months, this has continued to uptrend, hit this high. Then we saw this pattern that you might call a harami pattern where, today's body, this body's inside the previous day, saying we may have a pullback coming. But now we've got this candle shaping up today, that's engulfing this candle. And so we could say, well, I see that as an opportunity if you wanted to do an income generating strategy to say, I'm going to treat this as a swing trade. I'm going to buy 100 shares of stock. And when it gets back up to this 166 mark, you could even make it 165. You don't have to go all the way to the top. And if we're at 150.55, if we went up to 165.50, that's a $15 move. So we could make this our target, and we'd call this a swing target. Say, hey, when it gets up to 165, let's make it 165.50. So close to that previous high, we'd like to take our money. And then where might we put a stop? Well, we might say, well, today's low is 145.09. If it goes 3% below that, it's not going in the direction I expected. So 145.09 times 0.97. I'm going to put my stop at 140.73. And so we're risking potentially $10 a share for the opportunity to perhaps make 15. Does that make sense? And this is based on this engulfing pattern. All right, so we're going to come to our trade tab. And we are going to, I don't need these. We're going to do a stock example. We're going to buy custom with an OCO bracket. What does that give us? It gives us both our target and our exit. So our target on this is going to be 165.50. Let's say, we're just looking to make some income. Maybe we want to go to that event in Anaheim and then, go to Disney for a couple of days. Or 140.73. And this account has $1 million in it. So if we said, well, we could afford to do a $30,000 position and that wouldn't be, compromising our position sizing rules. So if our target is, you know, $15 above and we're doing 200 shares, you know, how much could we potentially make? Or that's what's our goal, is to make about $3,000. Okay. So we're going to put in this in our group, stocks with targets. And this is, we're going to put in a note that this is a swing target. Now, what's the downside? Well, the downside is that, you know, we could end up losing 2,000, and there isn't a guarantee with this stop. You know, we're looking at making 15 a share, but our downside is $10 a share. Now, if we start getting close to this, so let's just come and look at the chart. If we start getting close to this, can we move our stop up? We could. You know, so, you know, it's our trade. We can do whatever we want. So just to look at a couple of additional examples, what would we call this pattern? So big up day, gaps up, small body, and then this candle goes halfway or more through this, the first day's candle. We call that pattern an evening star. And that is a bearish configuration that technically does not require confirmation. You know, and it's saying, hey, expect that this may pull back a bit. So if you own the stock, might you say, well, this might be a good time to sell a covered call? You know, you might consider that. You know, and then you might not. One last one. Google. Could this be another evening star setting up today? Close to a resistance level. It just hit a new high yesterday. And that isn't saying, hey, the uptrend is over. It's just saying, hey, it may pull back for a few days. This 3 candles, you know, could be viewed as an evening star. Okay. So my homework or my suggestion for you would be, take a look at these charts and just look for some pattern recognition. You know, bring up a Dollar Tree, you know, or any stock, and just, you know, kind of go through and look at different patterns and say, what do we call this again? Inverted hammer. What would we call that if it happened at a ceiling? You know, a shooting star. Or if it happens up close to a ceiling, we could call that a hanging man, right? And so just get familiar. So I hope you have found this helpful. You know, somebody saying, can I swing trade? You could, you know, you could put on some example swing trades. We did 3 swing trade examples in trading a smaller account yesterday. So if you didn't catch that class, you may want to go back and have a look at that. So we looked at least a dozen different candlestick patterns. I appreciate your time and your attention, and stick around. Next week, we'll be coming back with the next one in the series. Coming up next will be Connie Hill. She's filling in for Mike Fairborn this month, and she'll be talking about swing, I believe it's swing trading. So you're going to want to stick around, and you've got a whole 45 minutes on swing trading coming your way next. So stay tuned. Don't forget to subscribe to the channel if you haven't done that already. Hit the like button. It helps move this up in the trading algorithm so more people can find this content. And then last but not least, follow Connie and I in the Land of X, Barb Armstrong CS, and Connie Hill CS. Somebody's asking if I posted the video entering the long calls. I'm still having an issue with my Thinkorswim, so I haven't been able to put those long call comparison trades in. So we may have to do some new comparison trades later in the week when I get it figured out. So thanks for asking. Thanks for being here. We'll see you in a webcast coming up soon. Take care, everyone. Bye for now.